Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in investors buying residential property. I want to talk about what is the best investment. And that's a movable feast. It's not always the same every single time. So I'll give you an idea. The last year or 2 years, I know real estate investors have been sitting on their hands not buying. Why? Well, negative cash flow. In other words, prices are going up, but also interest rates went up a lot. At one point, if you're an investor, you might have been paying 8%, 8.5%, and you couldn't make the deal work. So what did you do? Well, I'm a diversified investor. I own a lot of real estate, but I also own other things. I've got stocks, but also I found investments, what we call fixed incomes, that were paying principal guaranteed 6.5% per year. You take advantage of those high interest rates. You look at the investment that's going to make you wealthy. Now, I know this is heresy for somebody that specializes in real estate investment, because that's what I do. I should be telling you only buy real estate. Well, that's nuts. Nobody who gets wealthy only buys in real estate, but everybody that I know that is wealthy owns real estate, and I'm just talking about their personal home. They're buying investment property. That is typical of the 1%. And we deal with a lot of 1%ers in our business. So right now, going forward, this is your time for real estate. Why? Because rates are going to keep going down. Now, are they going to go to COVID levels? I don't think so. But less than a month ago, 25% down on a 30-year fixed mortgage rate was 6.625. Today, when I'm doing this video, it's 5.375, and the Fed hasn't met yet. So the market is ahead of the Fed, but the meeting's coming up pretty quickly here, and everybody's banking. Is it a 25 basis point reduction, 50 basis point reduction? So those rates could go down to 5%. And even at 5.375, or if you put 30% down, 5.25, I'm getting very strong positive cash flow. I got a house right now, it's about $255,000 in the Tulsa market, in the hottest school system in Oklahoma, and its cash flow on 257 or 200 middle 250s is like $457 per month positive cash flow. Principal, interest, taxes, insurance, property management fees, everything. So what I'm saying is these rates are going to go down a little bit further because the Fed very well, depending on the economy, may lower before the end of the year. So what I'm saying is now is a perfect time to say, okay, those fixed incomes were great, but my banker at Chase has already told me that after the Fed meets, my interest rate, which was 4.4% on my savings, is going to go down about 25%. Then it's going to go down again, because normally those rates are about 1%. All right. And that's where things are going there. If you make a lot of money in the stock market, it's 6%. But with real estate, especially with positive cash flow, holding on to the property 7 to 10 years, I'm looking as much as 17 to 19% return on investment every year. And that's a combination of positive cash flow because of the rates, 5%, 6%, 7% appreciation. I use 5, even though that's less than what's going on. And at the end of a particular period of time, you got a lot of money. So right now, what I'm telling people, and this is what I'm doing personally, this is the time that I'm now buying real estate. And we've got some great investments for you. Let us know if you're interested, and we'll show you how positive cash flow works for you.